Ian, welcome to our weekly mastermind call, man. Super excited to have you on this call. You have an incredible story how you've scaled your business, left your W-2 job, and built you're a multi-millionaire now. So if you can give us a little introduction about yourself, tell us a little background story about yourself, and then we can jump into the Q&A session.
Yeah, no problem. My name's Ian Horowitz from Equity Warehouse. We're out here on the East Coast. We're based out of Baltimore, Maryland. I actually sit just north of there up in Philadelphia. That's where we're based out of. My business partner and I, we were both career firemen for the city of Baltimore, and we stumbled into real estate. The external pressures were applied. We got hired in 07 and 08. We all know what happens. Pension systems start going bankrupt all across the country. There's no overtime, company closures. It was just a crazy time. We said there had to be a better way. There had to be a better way to provide for our family long term. There had to be a better way to, support us financially. God forbid something happened to us and we wanted to support our families. We were in a job that we could get killed. We stumbled on real estate, and the first house I ever bought was 25 grand. Put 25 grand, maybe. I don't know. We weren't doing accounting the way we are doing today. God knows what I put into it, but I believe I was in for about 50 to 60 grand, and I got 1250 rent, Section 8, and it was the best thing I ever did. And we cash flowed $600 a month. And from there on out, I was hooked and never looked back. And today we own and operate almost $70 million worth of real estate nationwide. We do primarily concentrate on self-storage, and multifamily assets is really what our heavy concentration is in as of today. And we have about, 15 to 16 team members that actively work with us to help us operate the portfolio, everything from administrative all the way down to the boots on the ground maintenance guys is what our team consists of today.
You said you bought your first property. Was that 2008-9 time period?
2012 was when I bought my first property.
2012. So, no, you were buying single family residential properties and then you scaled to self-storage and multifamily, right? What was the mindset shift that it took? I know I've struggled with, and a lot of other investors struggled with this, making that jump from residential single family to large self-storage or multifamily. What was that like? Like, what was the trigger for you on that?
Yeah, single family is fun, right? That's how we cut our teeth. We put in the work. We learned our systems, our maturity level mentally, just we're like little kids all the time. So our maturity level wasn't there. Even if I wanted to invest in commercial real estate day one, I don't know that I could have accomplished it. So single family is really where we learned and cut our teeth. But what happened was people started asking us, how do we get involved? How can we do more with you? And it was like, dude, like, I'm going to have you put money in and we're going to split $300 a month cash flow or $500 a month cash flow. Like, it wasn't appetizing to us to do it. And I just always felt like there was more, construction's our strong suit, to handle one house or 76 units. It's like, well, if I'm going to do all the work for one house, well, then why don't I just do it for 76 units or 100 units or 100,000 square feet? That really became the mind shift change of like, I'm doing all this work right now. I'm super transactional, but I can't really, like, I could scale it, but in the same sense, it's like there was just a lot of moving parts at any given time, and like the hustle and bustle is fine, but I'm going to do all that work. I'd rather do one deal. Like this year, just to give you context, like we would do 30 to 40 deals a year just in flipping or adding houses to the rental portfolio. Whereas today, if I do 5 deals this year, that'll be a lot. Like we're closing $1 million deal that took me a few weeks to put together. We're doing a $13 million build that's going to be worth 20 million bucks. I put that under contract last month. I don't have to close till October. I got tons of runway. It's much more methodical. And I don't know that in real time, I could have said, hey, like, why commercial? But today I can look back and say, the pace is a little bit slower if you want it to be, and the amount of work that you got to do is the same as single family, but the returns are exponentially potentially bigger, even though like the rate of return might be compressed, if that makes sense, right? Like the equity pops are bigger, but if you look at it dollar to dollar, sure, you can go get 30% return in, where Fresno, Detroit, Baltimore, like you can get insane returns, but you never find that scale to do it.
So you said if you
Whereas,
had started out with commercial, it's very interesting that you don't think you would have been as successful if you had started out? Like looking back, why do you say that? Is that the knowledge or the skill?
Yeah, I mean, I've done a lot of self-introspection, like looking in. I mean, dude, when I got involved in real estate, like my credit score was like under 600. Like I didn't know how I was going to refinance my property. I was still flying by the seat of my pants. And well, do I think buying $1 million asset at that point, I could have done it? I could have done it. Probably. Like we probably had the knowledge and wherewithal to get it done. But it would have been a massive uphill battle to create those systems. Where we created the systems in the single family space, it allowed us to then make a natural step into it. And our maturity levels followed it, right? Like we went from, oh, we made 100 grand, we made this, we made that, to saying, okay, well, we made 100 grand. That money's got to go in the bank. We got to reserve it for taxes and insurance and whatever else, and budget money forward. I mean, dude, we were whatever, 30 years old and just starting to mature, right? Like, and I personally think that I don't think I had the maturity level to do it, even
Interesting.
though I probably wanted to do commercial real estate earlier in my career. I didn't know where to uncover. I was kind of feeling like I don't want to say a fraud, but like you got horrible credit, like you can barely pay your bills. Like I was just a typical degenerate fireman. I didn't have my shit together. So to me go talk to a banker and be like, yo, let me borrow $1 million, like that's not happening. Asking
Right.
my friends and family to give me $1 million, it's not happening because I wasn't comfortable with who I was at that point to be able to go and do that deal.
Yeah. No, that makes sense. No, I appreciate you sharing that and having that realization kind of where you were versus where you're at now. So you need to be at a certain stage in order to go after the commercial property. So which makes sense.
Real quick to cut you off, just to be clear to everyone, like we talked about this. I think Sherrod, with his background, right, and his where you came from in real estate. I don't want to flip this on you. I know I'm here to help you guys, but I think it provides good color. Like I'm a degenerate fireman. You came from the white collar background of, all right, I have my stuff in order, very structured W-2 job. I think day one, you probably would have been exponentially more successful in commercial real estate than I would have been, if that makes
Yeah.
sense. I hope that like kind of provides
Yeah,
clarity to
yeah. No,
everyone.
no,
Don't think,
absolutely.
yeah,
Yeah.
don't think
No,
you
no,
have to
absolutely.
take the same track as me, right? So
Yeah, no, I mean it's something that you have to realize where in your investing journey you're at right now and see what's best for you. You might want to do commercial, but maybe doing some single family residential houses is a stepping stone for you to get to that commercial deal. Like start doing your commercial deals. Like you don't have to get discouraged, or I'm not able to do it because I don't have the credit, I don't have the income, or I don't have the background, but just work your way up to those kind of deals. So I appreciate you sharing that. I think that's where a lot of people struggle with is, they get discouraged because they're not at the stage where they want to be like 3, 5 years down the road. But the important thing is you have to look at where you're at right now and make the best of it. Right. And then try to get to that stage in 2, 3 years where you want to do the kind of deals you want to do. Not everybody may want to do commercial. You may want to start with doing one flip a year and then scale to 50 flips a year, if that's kind of what gets you excited. So you have to realize what makes you happy, rather than looking at, hey, this person is crushing it with commercial, this person is crushing it with flip, so I need to do that also.
yeah, 100%.
What kind of deals are you doing right now? Are you doing exclusively self-storage? Are you buying these properties? Are you building? I know you mentioned like a new build that you're doing. Are these all self-storage?
Yeah, most of what we're doing today revolves around the storage industrial space. And I'll just give you guys some color of how we ended up on that. So in 2019, yeah, we went from buying shells at 25, single family shells at 25 grand ish, being all in for about 120 grand ish, and they were worth about $150. We were getting 1250 rent. And I can tell you the numbers right now. 75% of 150 is $120,000. So we were refinancing, we're grinding away, things are going great. All of a sudden, pricing increases overnight. And we're like, dude, like we cannot continue to operate like this. You're paying $45,000 for the same shell I just paid 20 grand for. This makes zero financial sense. Rent didn't go up. We're like, this doesn't make any sense. So I started looking into commercial. And while multifamily seems really attractive for us in the Baltimore area, we watched a lot of DC money get burned up. A lot of New York money gets burned up. People don't know how to operate the real estate. So the idea of owning residential real estate across this country, a lot of people buy in Oklahoma and Texas and wherever. And I understand they're apartment buildings and I probably could get comfortable with it today. At that point, we weren't willing to turn the management over to somebody else. So while we did have some success in the multifamily space, it wasn't scalable for us. The self-storage space and the industrial space as a whole it was much more scalable. We were able to find continued opportunities. And as we've grown and built that out, what we found is while we love self-storage, we do want it a little bit closer to home to us so we can continue to create our company culture. We've also made a mind shift change of instead of, we've made a lot of money in value add, but coming out the gate and building something brand new that's Class A, we are construction first. That's our specialty. That's the value proposition that we provide to our capital investors. It's an easier workflow for all of us, for us to come in and operate from the standpoint of, building something. So we are staying in the storage space. Some of it's contractor storage. Some of it's just straight up industrial space. Other of it is true self-storage. But I can tell you it's probably one of the most demanded asset classes out there. Even though there is some retraction in pricing and self-storage. And you know what? There's still a ton of opportunity. The multifamily space, the problem is there's so much sophisticated capital that chases it at any given time. And it's very hard because we all know people need a place to live. There's a little bit more risk in storage and industrial and that whole thing because not everybody needs it, but the returns are a little bit better. And I can tell you this much, the richest people that I know in Baltimore and Philadelphia, they all own flex industrial space. That is like the number one thing that they do. And I'm just like, God damn, like, how do they make all this money? It's a very stable asset. Storage, there's a lot of in and out. Contractor storage is a little more formal with a little bit longer term lease, but you're still only dealing with a metal building and a concrete floor and a garage door. And that's what we like. And trying to keep it simple and just continue to grow in that fashion.
So how do you even go about, like when you, in 2019, when you made the shift of, hey, I'm going to go from like these single family houses to self-storage, how did you make that shift? Like, where do you even go about finding these properties?
Yeah, a lot of it started with just looking at everybody else's deals. Everybody's raising capital, right? So I just sign up for everybody's portal. I'm like, all right, let me learn this deal. Let me learn that deal. How does this guy doing it? Talking to everybody that I could. Side by side with that, as I'm watching how people are doing them or trying to understand it, I'm looking at some deals here and there. I'm going on Crexy. I'm going on LoopNet. I'm hitting every Facebook channel there is. Hey, what's going on? And then what I do is I go ahead and I underwrite those deals, and then I pick up the phone and call the broker and just talk to them and just say, hey, like, what's going on? I'm interested. Initially, I would talk very specifically, like, hey, we've had a lot of success in single family, new to the storage game. I think the numbers work. I might not be your best buyer, right? Like you're setting them up to let them know that you're probably not going to buy, but they are going to invest time into you. And then I cultivate those relationships with inside the broker network. That is my number one lead source for finding deals. And for me, look, we all know single family space, very transactional, in and out. You're not getting good residential brokers. Sometimes you are that continue to feed you deals. Everybody's doing off market. The problem with off market, while it's a great lead generation source, that's a one-time use. Sherrod and I met, we kind of met each other through a Deal Champ Summit. Then we interviewed each other on our podcast. Now I'm here speaking to your guys' mastermind, right? Like we're building that relationship. We're building that rapport that someday it's going to produce something else. It's the same thing with the brokers. I love these guys. They're my age group. They're having same career trajectories. They know that we can close deals. I'm transparent and honest with them. They start feeding you deals. They're like, hey, what do you think of this? What do you think of that? What do you think of this? And as you continue to build that rapport, the deals get better and better. Because in the commercial space, not every deal hits the marketplace because it is B2B. People are careful about putting their business out there. People don't want to know that they're selling. Other people are afraid that other real estate investors are watching them. They don't want their employees to find out. So building that rapport becomes very, very important. And I think it's way more important in the commercial space than it is the single family space.
Would you say in your space, like majority of the transactions that happen like without ever going on the market?
I'd say 50 to 60% is true because we're also in this buy box that the brokers know if it's on the market, it's very likely that I'm probably not paying it. Most of the time they know to bring us the stuff with the hair on it, the drama, right? Like we're getting ready to buy a deal next week. 15,000 square feet, contractor storage, got a small environmental issue. It's on the market. I sniffed it out. I said, no, I'm good. I waited till the guy was so desperate that we got it 50 cents on the dollar, but he never brought it back to the market when it felt out of contract. So it was on market, but off market. But yeah, a lot of stuff happens in the
Mhm.
background. A lot of stuff trades off market.
So let's say an investor right now who's listening to this and they're in residential space and they want to get involved a little bit and maybe partner up with someone like you. How would they go about doing that? Is there something they can do to add value on to what you're doing?
I would say if you want to go from single family to commercial, too many people put it on a pedestal, right? A lot of people toss it up there. And Sherrod and I talked about this for a while. Is like, you put it up on the pedestal and you're like, damn, I should have done that sooner or whatever it is. And it's like, no, it's not that hard, right? It's like, I just happened to take that little bit of risk and go back to remember like when you were first in real estate, how scary it was to get involved. That's the problem. Too many people, this is what we were talking about, is like too many people get comfortable. We were joking about this, right? Like any one of us could probably be like, oh yeah, 123 Main Street, it's worth this. I'll pay you that. And it's done. You don't need to do underwriting. When we went from single family to commercial, I had to go back and rebuild our underwriting process. I had to go back and figure out how to talk to banks. Like you had to blow up everything that worked and rebuild it so you can get to that next level. It's not the real estate that's on the pedestal. It's you that's not willing to get uncomfortable. How you can help us? I mean, dude, if you see a deal, I'll help. I'll take a look at it with you and say, okay, well, what's this look like? Cool. And maybe it's not a deal for you and it's a deal for me. Great. There's an acquisition fee for you. Or maybe it's like, hey, here's a great deal for you and allows me to deploy capital into your deal if it's set up correctly, right? Like there's a billion ways to work it. And again, this is the benefit of commercial real estate. We're not fighting over $20,000 or $500 a month of cash flow. We're talking about millions of dollars of equity or hundreds of $1,000s of equity and 10, 20, $30,000, if not more, a month of cash flow, right? So there's so much more room for more people to get involved on the deals. Like recently, I've been talking to some of my bigger capital investors and said, hey, like you've put in a bunch of money. Why don't you go tell your friends and family and I'll give you an extra point or a few extra points to do that? And he's like, hell yeah. Like I never knew that was an opportunity. He's a CFO of a major healthcare network. Used to be out your guys' way somewhere in Cali. Now he's on the East Coast. And it's like, well, yeah, why? What you should be doing such a good job that they want to tell their friends and family and help monetize people so they can continue to put money in deals.
And what sort of returns are you giving your investors on these deals?
Yeah, generally speaking, we're doing like 8% preferred return. We try to pay it out in real time where as possible. And then usually there's like a 2x multiple, and it's usually like a 15 to 20% IRR, right? Or about a 10% cash on cash return. And, it's pretty standard. It's really just like what works for everyone and, how can you get the deal done? A lot of the time it's us matching what the investors' expectations are. Like this Ambler deal that I was just telling you about, the small environmental issue, we set that one up with a 50-50 straight up equity split because it's an in and out deal. Everyone's a little different. In the end, we're trying to get them to achieve 15 to 20% rates of return on their capital with cash flow and liquidity events. Pretty much similar to what we were all doing in the single family space, just at a little bit bigger scale, right?
And how long is the money partner investing their money for? Like, is it the same deal as commercial multifamily where you put your money in and then you cash out like 3-5 years down the road?
Yeah, we try to keep people, we usually tell people a 5-year investment horizon. Sometimes we execute quicker. Other times we recapitalize, they get all their money back and we hold them forever, right? It's what works. I think the real conversation is having the transparent expectation up front. There's a big difference between raising equity from your friends and family and raising debt. Debt is much more transactional, less tax implications. Someone invests in equity, like they're along for the ride. I always laugh. I always tell them it's like, you ever watch the movie The Big Short? It's been a while since that's been out. But when the guy's sitting in an office and every day he bought all the defaulted mortgages and every day negative return, negative return, negative return, all the investors are like, you're an idiot. You need to sell. You're an idiot. Sell, sell, sell. We've lost 1,000%. And then the day the crisis hit, he went from like negative a couple 100% to positive, God knows how many 1,000%. He laughed and said, here's all your money back, guys. Thank you. Right. So it's a similar thing. When people are getting involved in equity, you're betting on the jockey. You're betting on the asset, but you're on the horse, but you're really betting on the jockey. Can they navigate situations that are thrown at them? I mean, do we have properties that have not performed? We've had properties that have had fires in them. We've had properties that have done absolutely amazing. In the end, it's being transparent and setting up the expectation up front with your capital investors to say, hey, you're getting involved in equity. It's going to be a wild, bumpy ride. Some of them are easier than others, but again, can't guarantee that there's going to be a smooth flight, and you're along for the ride. So we'll let you know and see you on the other side. So that's really what's important to it. So
Yeah. Yeah. Tom Myers here, he's a recently user. He says he's also in self-storage rebel with you. And from what you're saying, it sounds very similar to like residential properties, right? You're going to have, if you buy enough properties, there's going to be some that are going to do exceptionally well. There's some that are going to be average. There's going to be some that do poorly. But overall, you're looking at your rate of return across all the properties and not get so bogged down about, hey, this asset didn't do so well or this did so well. But going back to like what you were talking about, going from making the shift from residential to commercial or commercial properties or even multifamily, the fundamentals are the same, right? You have to still do your due diligence now. Instead of doing it on a residential asset, you're doing it on a commercial or multifamily asset, but you still have the same fundamentals that you have to follow, the same steps that you have to follow, but it just, you're adding a couple of zeros on their transactions.
yeah, relatively speaking, sure. But in the residential space, even though you're acting as a commercial, as a business operator, like you still have the benefits of the BS residential contracts that exist out there, right? Like surveys and all the other stuff that aren't really going to be applicable, non-refundable deposits, how strict are they on them? Maybe not. I've been in situations where we've been selling a property, guy didn't perform, lost his $20,000 deposit because they didn't do what they were supposed to do during due diligence, and they did not specifically write a financing contingency within their contract. That's a no-no. Environmental issues, right? Like you need to conduct real due diligence. We're real life example. We're buying this property, and it used to be a heating fuel depot, and the guy delivered heating fuel, and he sold his company off. Now he's stuck with the real estate. This guy, so we knew there was an environmental issue, and so did everybody else, because he had this property under contract for 1.3 million to sell. I said, well, why do you need me? And the broker said, well, listen, this guy won't sign the DEP agreement to sell it to somebody else because of the environmental issues that he created. I said, fine. So we did the environmental study. We go through the whole thing. I said, dude, I'll only pay you 600 grand. And he's like, what? I said, yeah, 600 grand. He's like, give me 700. We'll call it even. It's going to cost us 100 grand to fix up, and then we're going to sell this thing back to the other guy for $1.3 million, right? So it's really just understanding the due diligence that you need to conduct and not conduct. Another one is surveys. We had a property that we bought in Hattiesburg, Mississippi, storage facility. The guy built it with outside the setback requirements, and the city had to deed us 1.5 feet of the roadway. Craziest thing ever, to become compliant with inside the setback requirements. Otherwise, that property would have continued to get fined, right? Now, in Hattiesburg, Mississippi, that's way different than operating in Baltimore, Maryland. In Maryland, they would have made us rip down the property and move the whole thing, right? We just looked at a property the other day. There's a easement access issue that needs to be resolved, that we're like, well, if we could fix this property went from being $2 million to $4 million. So doing that due diligence and understanding that you're much more responsible, and the way your contract is written is exponentially more important than it is in residential real estate. Residential real estate, acting as a commercial guy, most of the time you'll still fall under the consumer protection rules. Commercial real estate, wild, wild west, man. You need to put it all in there and know what you're getting involved in.
Cool. Now, great. It's interesting you said about, was that Maryland, where they would have made you rip the entire property down and move it back? That's crazy.
Yep.
That's insane.
Yep.
In residential real estate, again, not to get political, but generally red states are better to be a landlord in than blue states. Is there anything like that in commercial that you notice?
Yeah, 100%. Dude, red states are the place to be. I don't care who you're voting for. It is what it is. We bought a 76 unit apartment building in Baltimore, Maryland. Yeah, I think you guys in California, well, at least in the news, they make it look horrible, but Maryland's 10 times worse. I bought a $5 million apartment building in Baltimore City. Not only, not only did we have to pay transfer and recordation of 1.5% each, so 3%, we also pay a mortgage recording tax that is equivalent to 1% of your loan amount, which was $4.5 million. I also had to pay a 0.75% VAT tax because the property that traded was over $1 million. And I'm like, dude, tax. I buy $1 million. So that cost us almost 300 grand to transfer that property into our name. Okay. I buy that same $1.5 million. I buy $1.5 million property, the one I was just telling you about in Hattiesburg, Mississippi. My closing cost was $5,000. Well,
Wow.
3x that. It's still only 15 grand, and it cost me 300 grand in Maryland. So look, there's ways to make money. Don't let politics come involved in it. If you are investing out of state, like why are you going to go to a state that's equally as hard as your own home state? I would say go identify the ones that are easier to operate in, property tax wise, transfer and recordation tax wise, pro tenant or pro landlord. I think those things are really important. Louisiana is technically a blue state. They're old school Democrats. They got some of the best tenant laws in the state, right? Like we had a guy move into one of our storage units, so we had to file an eviction to do this properly because he was a special needs guy. I filed on Thursday. I had court the following Wednesday, and the sheriff was there the next Friday. So in 8 days, I
Oh,
had that
wow.
dude evicted off my property, right? So there's a
That's
big
crazy.
difference.
Yeah.
Yeah, but that's a blue state. So if you would have just went
Yeah.
by the book and said, well, blue state, I'm out, no way. Right. So yeah, it's good to just go out and investigate. I think I saw someone comment saying about taxes and insurance. The taxes, property taxes, 100%. Some of it's because it's rural. Some of it's because it's red state. Some of it's because it's a blue state. But the insurance is a lot more based on location, crime rates, wind, environmental issues. Those are things that you want to look at. And again, this goes back to the due diligence. Do all this in your due diligence period to understand what you're going to do or not do. So,
Yeah. No, when I used to live in Chicago, and when I started investing back in 2010, I did tons of research, and I just happened to be living right next to Indiana, which is a red state, and they're totally different, like 30 minutes drive from downtown Chicago, totally different policies when it comes to landlords and tenant laws. It was like night and day. I was going to invest in Chicago, but then once I started doing research, I mean, the numbers seemed incredible in Chicago, but then if you had to evict a tenant, oh wow, yeah, it's just going to take at least a year, and then even after that, sometimes you may have to end up actually paying the tenant to get them to move out, which was just ridiculous. And then during COVID, we were still able to get some tenants evicted in a month or month and a half. Made world of difference. Yeah.
yeah. Yeah, for self storage, California was the only state that put a stay in on their lien laws. It lasted all of like 48 hours. And then it went away during COVID. But COVID is really, you asked maybe why, I think you asked why self storage over multifamily or industrial. I think another point is COVID really exposed who's in charge. And I don't care if it's the current idiot that's in office today or we're voting for Uncle Donnie, right? The government's going to continue to do what they want. We are not in control. In the industrial space, in the storage space, there's still some more autonomy to operate your business. And they're not coming after us with the same BS consumer protection laws. And, I think too many people get caught up. Oh, well, if Uncle Donald comes back, everything will be fine. No, dude, there's a lot of moving parts. There's a lot of people in this country that are in charge. And whenever there's consumers involved, especially where they live, because habitation is such an important topic that it's always going to have a spotlight on it. Whereas, dude, the business owner that didn't pay you, that's screwing over all his customers, and that's why he can't pay you, nobody's going to bitch about that if you go and change his locks and he's out the next day. You know what I mean? So it's a big difference operating in that space versus operating with, dude, I mean, we deal in subsidized housing, and it's like, yo, bro, there's some days it's like, man, she's got how many kids, and I got to evict them, and I got to do this. Like, even me, Mr. Red Lever, I still have a heart. It sucks, but in the same sense, you got to protect your investment. So
Yeah. Does that also carry over to your self-storage? Like, is it different between industrial self-storage versus your typical like self-storage that people think of? You know what, I'll just go rent a self-storage unit.
Yeah, so with the self-storage, you're dealing in lien laws. Someone doesn't in like Louisiana or not Louisiana, Mississippi and Texas, I can have people, sorry, Mississippi, Louisiana, and Texas, I can have people out in 30 days. If you don't pay your rent within 30 days, I'll have you overlocked and auctioned and out the door should I choose to do that fast. In Arkansas, which again is like an old school blue state, but it's now like completely red, it takes me 75 days before I can get someone out, which is a little crazy, but fine, so be it.
Not too bad.
With the
Yeah.
contract, yeah, 75
Yeah.
days is actually kind of long if you think about it. I mean, you're talking
I'm just
almost
comparing
upwards
it
of
to like
3 months.
residential in like Chicago or California, for example. That's kind of what my reference point is.
Yeah, it's still shorter, right? Or it
Yeah.
can be. In Maryland, we fight. But pre-COVID, we were 12 weeks. Now we're like, we're almost 6 months on some of these. So I feel your guys' pain. But in the same sense, it's longer than a lot of the other states that exist out there, which is hard because, like, again, Texas, 30 days, you're gone. Louisiana, 30 days, you're gone. What I would say is in the contractor storage, which we're making a big push towards. So just imagine self storage, but with longer term leases and bigger unit sizes.
Got it.
And those people, there can be a court case, but you also utilize lien laws that don't follow the consumer protection. So you could literally go and lock someone out, go to the court and have them evicted out. Each state's a little different on that. We know Maryland and Pennsylvania the best. But again, it's good to know that you are still in control. I don't have to worry about going to the courthouse. How many guys have you done this one? You go down to the courthouse, you got a deadlock case. So and so owes you X number of dollars. You walk in, they go get the public defender that's sitting out front and you're screwed. Now they're filing, we call it rent escrow. I don't know what you guys call it, but the tenant complains that the heat doesn't work. Meanwhile, your heat
Yeah.
works. So now they just delayed it. So they send out a city inspector to come and say, okay, it does work. And now your court case got delayed by another 4 weeks. Then you go back and then they're like, well, we want to try to mediate this thing. That's the new thing in Maryland. Let's mediate it. Okay, so now you got to go through this 2 week process to mediate. And it's like, dude, come on, man. Whereas I'll wait the time for the court case and I'll just go down there, tell the judge, hey, business owner didn't pay. They're not getting a public defender. They're not doing any of that crap to try to jam you up. So it's completely different. B2B, I enjoy a lot better than I do B2C just because it's a lot more transactional. It's easier to have real conversations with people.
Yeah, no, that makes sense. And what does your return look like on commercial deals that you're doing versus multifamily versus what they look like when you did residential?
Yeah, I mean, I was kind of alluding to this before. Like the returns could be bigger in single family, a little less sophistication on the seller end most of the time, but the dollar amounts that come back are generally smaller, right? Like I could get 20% on $100,000 on a house and make 20 grand, but I could do 10% of $10 million of capital outlay and get $1 million, right? Like
Right.
so the returns are compressed. However, the equity pops are exponentially bigger. You're working for a bigger goal. So it's hard to tell. I mean, dude, like
Yeah.
there's people out there that operate their commercial real estate portfolio the same way as single family and they want the down dirty price and they're eventually going to hit. I don't want to do that much work. We can make a lot of money by executing on deals. I mean, the rate of return on some of these deals we're doing. Like I was looking this Ambler deal, it's 15%. I mean, that's a win. But we're gonna net $250,000 for 3 months of work, So
Right.
yeah, I'm not sure if you're asking. Tom brings up a good point. I'm not sure if you're talking about that side of it or you're talking about like operational expense returns
No, I mean,
between
just like
multifamily and single.
overall, kind of what you're looking at. I mean, another difference I would note a big difference in residential versus commercial multifamily would be you're doing a lot more transactions versus kind of what you mentioned earlier in self-storage or multifamily. You're doing like one or two big transactions in a year and you're making a lot more money. So your ROI on your time would be a lot higher. ROI on the money might be very similar. And yeah, and like your net profit and multifamily versus self-storage might be different also.
Yeah, the net profits vary, right? But it's a metric, right? Like you're buying risk and you're buying, that's what you're buying, right? Like multifamily potentially is a safer investment than self-storage because of the needs. So your returns might go down a little bit. And as you go up, it gets a little bit more and more hairy. I mean, just to give you guys an example, like I'm not sure if some of you guys know Stratton Brown. He's out there up in Fresno. He was doing $1 million wholesale challenge. I said, "Oh yeah, I'll one up you." And I'm doing this $50 million acquisition challenge, but my pipeline's full. I got, let's see, 28, 29. I got $30 million, maybe a little bit more in the pipeline of value of properties just by doing this challenge over the past like 6 weeks, right? I had some of these queued up. I kind of knew they were coming. And some of these are completely brand new deals that I've had to force my hand. And the other thing that I would say is like, as I'm doing this $50 million challenge with inside my group, it's like I'm showing everybody, how do we raise capital? How have I had to change my underwriting? How have I been having to scale? Like, I think a lot of people have a hard time and they look at in single family, just the dollars and cents. It's very simple. I buy a house for 100, I can sell it for 200. Great. I can buy a house for 100, I'll rent it for 1250. Great. They don't need an underwriter. I went on Upwork, and if you guys aren't comfortable, I went on Upwork and I found a dude that used to be a commercial broker. I now have him helping me on a weekly basis, underwriting at least one deal a week. I want to underwrite as many deals as possible, but I could tell him my thesis. He could translate that into an underwriting template, and then we get to decide, do the deals work or do they not? And then inside my company, I build a deals committee. So me, my business partner, and our top two employees, we sit down once a month. We go through all the deal. We go through our complete portfolio. What's working, what's not. Sell it, keep it, wait till next year. And that's what we do. And then on the other half of the meeting is, here's the 4 deals that I underwrote this month, guys. What do you like? I like X. I like this one. I like that. We go back and negotiate, right? As we're actively always doing this. And that's the cool thing about commercial real estate is there's deals that you're going to underwrite that other people then buy and then present to them, and you get to watch what's going on. Not many people get to look inside Sherrod's books and say, oh man, he didn't. Well, because you don't need money for the deals, right? You're not putting it out there and telling everybody what you're doing. You don't get to follow along and see if it actually worked or not. So I just think, I think the commercial real estate provides a lot more avenues to create a true company to build and scale. Like, our goal out of all this is to build an autonomous company that is able to invest in commercial real estate when me and Dan leave this planet, right? And whether our kids enjoy it or not, we have the team members in place that we can continue to grow. I think that's way harder in the single family space than it is in the commercial real estate space.
Yep, absolutely. And then the money that you're raising, are you raising them from accredited investors or no?
Yeah, sometimes. It's all friends and family. We set up debt shares. We set up equity shares. We do keep provisions to allow non-accredited investors to invest with us because it's important to us. We are firemen. We want our friends and family to enjoy the investments the same way that we do. There are firemen that can save money that aren't accredited investors, first responders, military. They have money. They get settlements, right? Like, they have the ability to raise to enjoy or to save up money to then be able to invest it and be able to enjoy a better life. We want to be able to provide that for them. So it's all different. You know, our average investment size is about 50 grand. However, we take as small as 10 and upwards as much as you want to put in. But 50 grand is really our wheelhouse. We prefer them to be accredited. It makes life a lot easier when it comes to that, especially, you know, like if someone on here wanted to invest, like, I don't have a relationship. We have to establish a relationship if you're a non-accredited investor to then say, yes, we both agree to enter in this. It's not just a one-time meeting. There is a pre-existing relationship that allows them to invest. So yeah, there's a little bit of red tape to navigate when it comes to that. But if you're creative and willing and want to share with other people what you're doing, you will figure out how to get them involved.
So Ian, looking back at, last 12 years since you bought your first property, what do you see if you could start all over again? What would you do different now with the knowledge that you have, knowledge and skill set that you have now?
If I had like a tenth of the knowledge that I had today, there's 2 things that I would have done different. I would have got involved with a local commercial bank sooner. I was always scared to reach out. I just kind of dealt in the residential mortgage space, and it took me a little bit to cross that bridge and set up a rental portfolio of like scale. I should have done it earlier. I just figured banks didn't want to talk to me because of my background and wouldn't take us seriously. The other thing that I would have done was well, I didn't have the maturity level initially. Instead of waiting almost 8 years to get involved in commercial real estate, I would have done it in year 3 or 4. I would have done it sooner. And we had some looks at some deals and just always got scared because we didn't know the financing piece. It makes sense why we didn't do it. I just wish we would have done it sooner and trusted what we had going on sooner to execute. But hey, man, it's a long life, and we can make up for lost time. So
Yeah, absolutely. No, you've had an incredible success story. I love that. Yeah. And you're so open about kind of what you're doing in your business, and you're so approachable. So that's so great about you. Heidi, and if someone wants to connect with you, learn more about kind of, what you have going on, what's the best way for them to do that?
yeah, you can check out equitywarehouse.com. You can look and see case studies of how we co-invest with our friends and family, or just shoot me an email, Ian@equitywarehouse.com. Happy to talk to everyone. And then we're on all the social channels. I'm the most active on Instagram under Equity Warehouse. But yeah, I mean, dude, we're out there. You'll see me on podcasts. You'll see me at events. I even traveled to the West Coast last year and spoke up in Fresno, which was a good event, cool little town. Which, by the way, like I think we went at peak harvest season, and there was the pollen. I could literally taste the pollen in the air. But yeah, you'll
Yeah.
see me out and about. I'm
Yeah.
easy to find if you want to find me. So
Yeah. All right. I'm going to put link to your website in the comment, and then we'll also add it in the recording. Ian, thank you so much for coming on the call, man. This was incredible. I always love connecting with you, speaking with you. You're so open about your journey and kind of the mindset shift that you've had and all the incredible success you've had. Thank you so much.
yeah, man. Yep.
Cool. Awesome. All right, guys. Thank you so much. See you guys on the next week call. Thanks. Bye.